All right, welcome back. Another update for you guys. This is going to be a video about the options trading that I typically do with my account. So it's not going to be about buying anything today or showing you the dividend income that's coming in. I had a few requests on what I do with my options and what am I looking for. So if you don't know what options are, please do some research. There's some great websites out there. One of them being Tasty Trades. I don't have any affiliation with them, but I think it's called Tasty Trades. They have a lot of free videos to get you started on how to do or how to sell options. So I only use two methods of options, and usually I think these are pretty safe for me. I'm still learning about options, so I'm not going to get into the Iron Eagle, Condor, whatever the other ones are, the spreads or anything like that. I just do two different kinds, and I do covered calls and I sell cash secured puts. So a CC and a CSP. So on a covered call, when you're selling a covered call, it means you have 100 shares um, of a certain stock. So it goes in blocks of 100. So just picture always blocks of 100 shares. So you would have, for a covered call, you would have to own 100 shares. And for a cash secured put, you would have to have enough money to buy blocks of 100 shares. So those are the two options I use. So for example, if, hold on, turn that off real quick. Here we are. Okay, so this morning, I have 100 shares of Altria. This morning, I did sell a call, covered call on Altria for this Friday. So it's coming up in 5 days, 4 days almost, a little bit under five. And I decided to sell at $51 and it paid me 14 cents per share. As you guys can see, I brought this little guy here so you guys can see. So my profit is right there, 14 cents per share. So that equals to be a total of $14. Now, the price is getting closer to 51 right now. So this is worth $28 now. So I am actually negative 14, but I did receive the $14 already. As you guys can see, it's worth 28 right now. If it hits, let's look at Altria real quick. Let's scroll down to Altria here. So Altria right now is at $50.66. So if it hits $51 or higher by Friday, I will lose 100 shares. My 100, I'll keep three there. 100 shares at the price of that I chose, which was $51. And it's listed, where's my, oh, right there, right there. So $51. Now, if the price never hits $51 by Friday, I already kept the $14 and I keep my 100 shares. Hopefully that makes sense. I'm not going too fast. So let's say I want to get out of this before Friday. I could buy it back at 27 right now. Now, if I wait till tomorrow, this might drop or it might go higher depending on the price of Ultra, which right now it's 50.64. As you guys see, it dropped to 2 cents and this dropped to 27. Now, as the time goes by, it starts this value, and as the days go by, I mean, and the price doesn't go close to 51, let's say it goes down to 49, this is going to be worth a lot less. Okay, so as the days go by, it what they call it decays, it's time decay, so it keeps falling as far as the value. So I like to wait till the end. Now, if I feel like if I'm gonna lose money or I'm gonna lose my shares, either be okay losing the shares, or you can roll it until the next week or in a couple of weeks or whatever. But I tend not to roll. That gets a little bit more detailed, but I'm not gonna go into that. So you could either buy it back or you can wait until Friday and see what happens. You see how it changed to 28 now because the price is getting closer to 51. So my target price is 51. But what I'm going to show you here, this one's a little riskier. I didn't mind selling at 51 because as you guys can see, my average cost is 46.85. So if I go to 51, I'll be okay. It's all profit. Then what I do is I'll have the money, the 5,000, 5,100 that I will make. Then I can sell a put, so which is the cash secured put. So let's continue with the call right now. Hopefully this is not too confusing for you guys. All right, so let's pretend we're going to do a call on Apple, and we're going to pretend we own 100 shares of Apple. Okay, I don't own them, but let's just play with Apple because you want to do the cash secured puts and the covered calls on stocks you don't mind owning. Don't play the crazy cheap stocks, or meme stocks, or anything like that because you're going to end up with losing money, or you're going to end up with a stock that you don't like or trash. So you don't play with stocks you don't mind owning. So make sure these are stocks that you like, companies you like, and you don't mind owning these stocks. So for Apple, for example, let's pretend we have 100 shares of Apple. So we hit trade options. Now, I like to go a week to 2 weeks out. Some people like to go 30 days, 45 days. I feel like I have more control within a week. So let's just go within a week right now. You don't make as much money as you if you go out, and I'll show you guys the difference. So let's say we're going to go to this Friday. If you're going to sell a call because you own 100 shares, the strike price is, I'm sorry, the share price is 172.74 right now. So you want to sell a call, meaning you're okay selling your shares at a certain price, okay? So what I like to do when you're selling a call, a covered call, you want to stay with a delta of zero point 0.2. Okay, this is what I usually do. So I'll show you guys where I'm at with that. So let's say you own 100 shares and the price is 172 right now. You're like, okay, I'll sell by Friday. I'll be okay with 180. So let me go back. I guess a covered call we're going to do, let's go 177 and see where the delta is. Okay, so let's say 177. You see the delta down here where I'm marking? 0.14. So I like to stay with zero point 0.2 or lower. So this would be ideal. Or even if you want to be safer, you can go lower at 180. See, it's 0.05. So it's going to keep you pretty safe. Not guaranteed, but it's going to keep you pretty safe. So the difference here, if you pick 180, you make 10 cents per share. So if you have 100 at 180, you'll only make $10 for the week. Okay. Now, if you drop it down to 177.55, you'll make $31. Remember, this is multiplied times 100 because of how many shares. Now it just dropped to 31. So as the time goes by, these start decaying real quick. So this one wouldn't be bad if I had it because look, the delta is still 0.14. I like to stay within delta of 0.2. This is my preference. Please do your research. I'm not giving you any financial advice, but this is what I do. I mean, you could go a little bit riskier and go to 175 by the end of the week. You're at 0.3 delta, but I don't like being there. Usually 0.2, okay? You will make $89, okay? So that's a covered call. Now let's say we want to go out 2 weeks out. Now you're going to make a lot more money. At $180 each, you make $106, okay? Let's look at the delta. You're at 0.21, a little bit higher. You don't want to be there really. So you might be safe here. 0.14 delta on a covered call. You'll make 64 bucks by the 25th of February. So that's going to give you a couple of weeks from now. So a lot can happen. Yeah, the stock can go up 180. So let's say the stock goes to 185 and you already sold yours at 182. And what happens on that last day, you're going to get you're going to sell at 182, not 185. So that's something you got to understand. If the shares go above your strike that you selected, you're going to lose your shares at the lower price, or you can roll, but that's going to cost you some money. So be careful or be happy with what you select. You can always get out, like I said, you can always buy it back, but it might cost you some money. So that's a covered call that I do on Apple, for example. So let's say you sold all your shares of Apple because the strike price went above or right on it, and then your shares are gone right on that last Friday. So they're assigned, they're gone. But in exchange, you have 100 shares worth that you sold. So let's say it was at 172, so you have 17,000 $17,260, right? So you have your money, and I know that's a lot of money. Some people will go, oh, that's crazy. I can't put that much money into Apple. That's fine. Find another company that's cheaper. Do a $20 company, 30, 40, $50 company. But like I said, on the secured puts, the cash secured puts, you have to have the cash to be able to cover that. So let's say we have the cash to buy 100 shares of Apple, $17,000. And we're going to go for this Friday. So we're going to sell a put, okay? Don't get scared because it's all red, but just watch. And the reason it's red is because the stock is up. You don't want to sell a put once the stock is going up. It's better when it's going down because you're going to get more premium for it. As it's going up, premium is going to be less. Same thing with a covered call. You want to sell a call when the stock is going up. If the stock is going down, you don't want to sell a call and say, oh yeah, I'll take this much because the premium is going to be a lot lower. So let's say we have the 17,000 and we want to sell by this Friday a put, meaning I will put up my $17,000 or less to buy 100 shares of Apple by this Friday. Okay, so you're going to tie up your 17,000. I know it sounds like a lot, but some people make good money. So on the cash secured puts, we're going to do on a delta of zero point 0.3. Okay, so let's remember that 0.3. So it's 172. You're going to feel comfortable with whatever. Let's look at a delta here. Here's a delta 0.29, 0.28 right now, just lowered. So you're good. You're within your range. You want to go 0.3 or lower. So let's say you're going to do $17,000, 100 shares at 170. You're going to make $96 by Friday with your 17,000. I know. You're going to say that's not enough money for tying up your $17,000. True. But if the price never hits 170, let's say it's 170 and 1 penny, you don't buy the shares. You do get the $97, $98. You just don't buy them. So by next week, you can do it again. That's another $100. So see, now it's 99. It does, and you can pick what you want to sell at. So let's say we're going to sell a little delayed here. Okay. So we sell one. See, it's going to say you're going to have $16,900. You're going to make 97 bucks. And this expires this Friday. So by Friday, if it never hits 170, you keep your money anyway, and you keep this money, the 17 or 16,900. That's a secured put. So if you want to go safer, you can even go 165. So you don't have to risk that much money, and maybe they'll never hit, but you're going to make $29. This is times 100. So that's a secured put. I like to stay within zero point 0.3 or lower. This is much lower. So, but you never know. Anything can happen. This can crash and you get stuck. So let's say you decided to do 165 put. Something happens with Apple. Oh, and don't sell these around earnings reports. Just stay away from that because it could drop or who knows. Look what happened to Facebook or Meta the other day. So 165, let's say, yeah, see, it's 173 right now, 172. So let's say you do, okay, I'll feel safe. I'll make 28 bucks. Yeah, that's a lot of money to tie up, but it's 165, and then the price drops and it's 160 by Friday. You're still going to pay 165. Then you get stuck with shares that are worth 160. You have 100. That's why I said make sure you buy a company or you play around with a company that you don't mind owning, because then you have 100 shares of Apple, you're going to have to get 165 at least to get out of it, or if you feel comfortable, you can start selling calls on 162, 165. But anyway, so if we go back out a little bit and you want to sell a put by the 25th, and you feel comfortable at 165, you're going to make $146 in a couple of weeks. So yeah, you do tie up a lot more money. You can always get out by buying it back. Um, so this is just kind of what I do. Hopefully this made sense and it wasn't too confusing. So I do a covered call if I have 100 shares. If I don't have 100 shares, I make sure I have the money to buy 100 shares. So for Apple, it would be $17,000 in your account. Or if you want to do a $50 stock, make sure you have $5,000 in your account. So yes, it does take money either to buy the stock and hold it and sell calls on 100 shares, or you can do it on putting money and do puts. And that's what I do. I do every week. I try to do every week. Um, or I do it every other week. So I go about 2 weeks out at the most, maybe three. Now you could go out further. So let's go crazy here. Okay, let's say January 2024, and you're going to sell a put on Apple. Okay. Now this is the problem with this, and I've seen people do this. So let's say you decide to do 160. Okay, and you got to tie up $16,000. You'll get a premium of 2,143, but you're tying up, actually, why does it say, oh, this is minus this, 10. So you're tying up 160 times 100 for a year, almost 2 years, but you get 2 grand. So I don't think that's smart. You're better off doing a couple of weeks, maybe 30 days, but that's your choice. Do your research on that. So hopefully this was informative. Hopefully it wasn't too confusing. I did want to show you guys what it looks like if you want to play with Tesla. It's kind of crazy. But you have to have that much money. So let's say you're going to sell a put on Tesla for this Friday. Let's go next Friday. You sell a put, and the price right now it's 925. You'll feel comfortable paying, let's say, $900. That is $90,000 you got to put up. You're going to get 2,800 for till next week. So, I mean, there's people out there that do have this much money. I don't to play around with, but you risk, $90,000, but you're going to own Tesla at the worst if it crashes or whatever, right? You'll own Tesla shares, 100 shares, but you'll make 2,800 bucks for a week and a half, and then you can get out if you want. Maybe next week it'll drop more if it never hits that 900 price. So yeah, people make money doing this, but you have to have a lot of money for these big stocks. But like I said, start slow. Check out that website I gave you guys, Tasty Trades. Try to stay within a covered call at zero point 0.2 delta. That's what I do. Or if you're selling a put, 0.3 or lower delta. And you should be pretty safe. And please do stocks that you don't mind owning. You don't want to get stuck owning companies you don't like, or that are just junk uh, companies. So, you guys have any questions? Please put it in the comments. Anybody out there that has experience with options, go ahead and put stuff on the comments if you guys are interested, if you want. Appreciate everybody watching these videos. We're getting a ton of subs, which is awesome. We crossed 1,000. Thank you guys. And I'll talk to you guys on the next video. Thanks.